I'd say the collapse of, those three banks you mentioned in March. It's SVB, it was Signature Bank, and First
Yes,
Republic, right?
yes,
That was definitely unsettling. It was a shock to the system. I'd say even added to that, more recently, end of summer in August, we saw Moody's, right, downgrade
yes,
10 more banks, right?
yeah,
And I think they put six under review, and they maybe had a negative switch on their outlook for another 10 or 11 banks. So certainly a much more scrutiny on the part of credit rating agencies on this exact segment of lending
yeah,
institutions, that middle to small piece of the lending universe.
yeah,
Do I think this means potentially more trouble? Maybe, for those banks.
yeah.
But what I'm more inclined to see is that you'll likely see these traditional, smaller regional banks enact what I had said earlier about what we saw in '08 and '09, that tighter, restriction on lending, maybe more scrutiny on who they lend to, if they lend at all. They might pull back altogether on lending to this mid-sized business that they had historically been supporting. Whether they do it in the form of lower leverage or less financing altogether, or just completely pull out because they may have some troubled assets in their portfolio, I think it would lead to some certainly dislocation or disruption there. But at the same time, what I'd say is that type of, the downgrades, potential continued volatility in, the broader banking sector, that, those that trade publicly, I do think that combo will create more opportunity for the non-bank lending platforms we talked about earlier, not only in terms of the deal flow that would potentially come to the non-bank lending universe,
Mhm.
but also this ability to have continued tighter selectivity, right, and better lender protections, and have a more lender-friendly environment, which is ideal for non-bank lenders. So not only are you going to see potentially more pickup in deal flow, but you'll see higher quality borrowers. Any transaction that we'll do today, we're going to do it on non-bank lenders' terms, right? We're not going to negotiate those terms away. If not, we just won't do the deal, right? So I do think those platforms that have scale and flexibility, and then the capital in that non-bank universe, will continue to take the share from the commercial and regional banks that have now been in a place that they're going to have to step away.
So basically, as bank recede from where the traditional lending practices for all the reasons you mentioned, the private side, or we don't call it shadow, but private lenders are picking up that gap, right?
Yes.
And that has been a phenomenon since GFC, and it continued to expand as banks continue to, from time to time, run into trouble.
Yeah.